Well, all right, you guys. Good afternoon, good evening on Sunday, June 23rd. I hope you're staying cool wherever you are. It's really hot here. You have flies came in. Hot and muggy in DC. This will probably be a short video because it is about MMTLP and NextBridge. I got a little bit of feedback on my last video, but I also today listened to Bird Lady Roller Pigeon's most recent video. I think it was her most recent one. And she brought up something that I kind of have had in the background, so I decided to look it up. And that is that there continues to be a, I tried to print it out. I tried to print it out for you, but I can't make the viewer from the SEC work. So let me just read I can get it here, but I can't get it to print. Anyway, there's an amendment to the S1 registration statement filed under the Securities Act of 1933 for NextBridge hydrocarbons. And I don't know if she's correct that they're going to move forward to doing this offering, but since it just, I'll try to give you the exact date. Nope, that's not it. Anyway, just recently, I just got to find it. Here's the amendment. In February 6th, they filed this amendment, number 3, for, I'll read the, it says subject to completion, February 6, 2024. We are offering directly to selected accredited investors up to 40 million shares of common stock. We have engaged Roth Capital Partners to act as our placement agent in connection with this offering. The placement agent may be deemed to be an underwriter. Remember, that's what, this is a legitimate firm. It's not the other ones we've been dealing with. The placement agent will have no obligation, okay, blah, blah, blah. Okay. They don't have an offering price, but the number of shares is 40 million. Now, the first thing that comes out to me, and if you're in the view that your money was robbed and and I'm just saying there's different points of view, then you won't be impressed by this logic of mine. But this is an offering that only goes to accredited investors. And if it happens, I don't know. But you have an opportunity to move your non-existent placeholder. The placeholder is existent, but potentially it doesn't represent any shares. You can go claim your shares of NextBridge, even if you, obviously, even if you're not accredited. Right? You just move them over. So in a way, this is an opportunity that you wouldn't normally see. And to me, that's a real benefit. I know, I'm trying to look at the silver lining in the cloud, I know. But I think it is a silver lining. So there's a summary of the prospectus, some highlights, the risks, let's just read out the one sentence of what you own. We are an energy company engaged in the acquisition, exploration, and/or development of oil and natural gas properties in the United States. Our primary focus has been the development of interest in an oil and gas project we hold in the Ora Grande Basin in West Texas in Hudspeth County, Texas. In addition, we have minor interests, the Hazel and in Oklahoma, Midland Basin. We recently spun off from Meta Materials, pursuant to which we became an independent company. Prior to that, we were a subsidiary. We operate our business through 5 wholly owned subsidiaries: Torchlight Energy, Hudspeth Oil, Torchlight Hazel, Hudspeth Operating, Wolfbone Investments. We, as of the third quarter of last year, so this could have changed. The great thing about an offering and a prospectus, if and when it happens, it is a snapshot. It's the best snapshot you're going to get looking under the hood of the company. So if it happens, I look forward to it. But there's information here. So they had 3 projects: Ora Grande, Hazel, and the Kodiak in central Oklahoma. That one, I met the geologist way back when. I think it's the same one. It was an Oklahoma project. Okay, we're a emerging growth company defined by the Securities Act. We only need to have 2 years of audited financial statements, which brings up something I want to point out to you as well. Of course, this hit the news because they could attack Trump. SEC charges Trump media auditor with massive fraud. So if you finish the title there, you figure it's something to do with Trump and he's bad. But then it says, if you leave the mention of Trump out, SEC charges auditor with massive fraud on hundreds of companies, imposes lifetime ban. The auditing firm for Trump media, I don't know why they need to point that out, and the owner were charged with massive fraud by the Securities and Exchange Commission for work which affected more than 1,500 SEC filings. The auditor, B.F. Borgers, CPA, and Benjamin Borgers have agreed to be permanently suspended from practicing as accountants, and they're paying $14 million fine. Well, anyway, that brings us back to our favorite. On 2/15 February, so about a week after this amendment to the S1 was filed, the company announced that on February 10th, we dismissed B.F. Borgers as the company's independent registered public accounting firm. BF Borgers did the financial statements for the years ended December 31, 22 and 21, and those reports did not contain adverse opinion, etc. There were no disagreements. We delivered a copy of the current report to the SEC. So then the company, on February 10th, the audit committee approved the engagement of M&K CPAs, PLLC, as the company's independent registered public accounting firm for the year ended 2023. During the years ended 22 and 21, neither the company nor anyone on the company's behalf consulted with M&K CPAs. Anyway, the reason I bring that up is it's possible, if Bird Lady Roller Pigeons is correct in drawing our attention to this offering, one reason why it may be underway but be delayed is that change in auditing firms. And I certainly would think it's possible, it's possible that the work since 1,500 documents were fraudulent, or at least that's what the SEC alleged from the news I just read. Maybe there's been a lot of work by M&K auditors. So anyway, this prospectus, there's a few things to go through in here. Not a lot. It's a long one. But the first thing here is that if she's right, and she usually does pretty good analysis, that may explain why they filed these amendments, and it's been out there, I guess, over a year, because the original filing was in the beginning of last year. So it might explain why it's now June and nothing's happened. But I would guess, as with anything, just because it's taken a long time doesn't mean it's going to take a lot longer. So anyway, they're a smaller reporting company, so the burden is not as onerous. They have 248,800,000 shares out before this offering. After this offering, if they do the total 40 million shares, they'll have 288,830,516. You can tell I'm putting a lot of ifs in here, but this is out there. So we have to at least presume that it is going to be turned to. My opinion is the only way to catch out the criminals on the shorting side is to prove up the Ora Grande, which could be a massive new field discovery with I showed you that yesterday. I can't find it, but with midpoint at 100% ownership, 5 billion barrels recoverable. It's a huge number. No one's going to believe it unless they drill. That's what they need to do. They need to drill to prove it up. So that would trap out the criminals. It'll trap out the brokerage firms and the broker-dealers and the offshores. I continue to be totally against trading in the stock, but regardless of that, If this offering were to occur, it would trap the criminals even worse than they're trapped right now. But what else would it do? It'd do it for a couple of reasons, because then you have a price that the prime brokers have to record. And the compliance officers are going to start asking for more money to protect their position. I don't think lawyers allow speculation into their calculations. But just imagine this, if NextBridge does this offering or something like it, what if they have all the money they need? They never need to go back to the criminals. They have enough money for this year's CapEx, next year's CapEx, maybe longer. And they're able to prove up, even partly prove up their resources in this Ora Grande Basin. Those lawyers are going to start saying, oh my gosh, Fidelity, oh my gosh, Schwab, oh my gosh, Hilltop, oh my gosh, Trade Station. Do you know how much these shares are worth according to the reserves in the ground? And you can discount them all you want, but these shares are worth, I don't know, I'm going to make it up, $50 a share. That may be too high, but I'm just using an example. That's going to frighten the heck out of them, and they're going to come to the settlement table. I continue to think that when they come to the settlement table, it's an opportunity for NextBridge to become massively funded at a high price. But cross that bridge. Right now, this is the topic I want to look at. So they'll have 288,830 shares outstanding. So if getting rid of this Borders accounting firm has delayed everything, it's also possible that they're finished with the delay, right? So let's just go through a couple things I found in here. A lot of it's boilerplate. One thing is, I didn't say, did I say this already? Just going back to the top. You can go back to the top and down and again and over again. Roth Capital Partners. I think I did say that. So I would imagine there's been a lot of work done behind the scenes over this last, basically a year. There's risk factors. Market for our stock. Our common stock is not listed for trading on any stock exchange or market. The shares of common stock will not be eligible for electronic transfer through the depository trust company. So that means the hot money in these hedge funds, they can't sign up for it, DVP the shares, and either trade out or give it to cover the short positions that are out there. And it can't be transferred to any established clearing corporation. Accordingly, there is currently no public trading market for the common stock, and there is no current expectation for a public market to develop. So this is kind of like a private placement, which you can get into just by moving your shares over to the transfer agent. Let's go through this, and then I want to talk about that moving of shares, because not everybody can do it, right? That's some feedback I got today. Okay, they're talking about the risks. And there's a lot of them. There's a lot of them. and the income tax considerations. All right, use of proceeds. We estimate the use of proceeds, that's blank. We expect to use the proceeds from this offering to fund drilling and exploration activities. Fantastic. And to meet our drilling obligations under our leases and for general corporate purposes. That's fantastic. Okay, our business. We are an energy company. I already read all that before. Our primary interests are in the three that I mentioned. Rich Masterson, our consulting geologist, originated our Ora Grande project as discussed below, based on his tenure as a geologist since 1974. He is credited with originating the Wolfbone Shale play in the southern Delaware Basin of West Texas and has prepared prospects totaling over 150,000 acres, which have been lease drilled and are currently being developed by Devon Energy, Occidental Petroleum, Noble Energy, among others. The company has drilled 14 test wells in the Ora Grande project in order to stay in compliance with the continuous drilling clause under the University Lands Development Unit Agreement, the DDU. Sorry for my pronunciation. To test for potential shallow pay zones and deeper pay zones, which may be present on structural plays. I hope the heat maybe is making me sound like Joe Biden. We are satisfied the 2021 and 2022 drilling obligations are complete, and in satisfying our 21 and 22 drilling obligations, we identified new potential pay zones not yet discovered in the Ora Grande project. So the drilling they did, they discovered, identified new potential pay zones. This is data that, if it's not correct, you go to jail. Remember, Crappy Barra can say anything they want. They don't go. But if you're a CEO, you got to be truthful. He talks about his other projects. I don't want to talk about that. There's little more discussion. I just got to find it. Okay, that's the Johnson. Let's read about the Johnson. Recent developments, effective as of October 6th, 2023, 17,000 acre Johnson prospect in the same county, Hudspeth County. It's a portion of the Ora Grande. There's a $7 million funding, blah, blah, blah. I want to skip all over that. All right, I thought they'd tell us a little bit of the results. Well, this is interesting. This is a touch point. I don't know if it has any relevance. It says, within a specified period following drilling of the initial 5 wells, as per the agreements they all signed, each participant may elect to transfer and assign all of their interest in exchange for common stock at a price of $1.20 a share. I don't know if that means anything for this offering, because I'm hoping the offering will be at a higher price. All right, they announced the Cordax Evolution Technologies. At this point, it was still out. As you know, it's been, okay, here's management's discussion. And it goes through the history you know. We have met our drilling commitments to drill 5 new wells in the Ora Grande project in advance of March 31, 2023 deadline. The data collected from these 5 wells, in addition to the 5 wells drilled in 21, confirmed that there are at least 5 potential distinct reservoirs under our acreage. While these, now here's a risk. While these wells may have the potential to produce hydrocarbons to sell commercially in the future, we have no immediate plans to deploy the additional capital necessary to sell production from these wells to third parties. Instead, this is a good thing, we plan to use the results from these wells to determine our drilling plans for future wells, including reservoir locations, target depths, and designated acreage in the Ora Grande project. As of September 30, 2023, we have commenced drilling activities under the 2023 drilling program and drilling 2 of the 5 wells required for the program. We may consider deploying additional capital necessary. I don't see. I guess that's the Ora Grande. I mean, the Johnson is the Ora Grande. It doesn't mention the Johnson. So anyway, that's good. They're moving forward. So they drilled those wells to further capture and document the scientific base in support of demonstrating the production potential of the property. It's the perfect thing to do. He wants, the team wants to prove the value, and you want to go up that hockey stick of that value. Okay, here's the results of operation. They go through it's all de minimis. The production is de minimis. Cash flows, all puny. Okay. We discussed some of the loan agreements, executive officers. All right, let's just leave it there. Compensation. You can find this at the SEC site. So this will be an excellent source of information on where the company stands. They can issue up to 50 million shares of preferred, and that's on top of the 500 million in common stock that is authorized. I was thinking about that. I don't know. What if they did preferred stock instead of common stock? That would really hurt the criminals. But that's just a thought. I'd have to work through that. But one of the things the criminals will do, they will go through one of their buddies on Wall Street, and that buddy, let's call it Yorkville Advisors, that Yorkville Advisors will put in to buy 10 million shares from Roth Capital. If they get it, then Roth Capital gives them the 10 million shares, and Yorkville's clients get off the hook on their short position at a reasonable price. So one way, it seems like that you could get out of that is if you did preferred shares. But I don't know. There's a lot of arguments to just have one class of stock. I don't know if they'll do it that way. And well, let's read some of this and then I'll stop reading this. The Ora Grande Project, West Texas. On August 7, 2014, Torchlight entered into a purchase agreement with Hudspeth, which is McCabe Petroleum, Greg McCabe. Torchlight purchased 100% of the capital stock. Okay, let's skip on. So Mr. McCabe owns a 4.5% overriding royalty interest in the Ora Grande. That's nice. That's big. So in other words, if the university lands deal has an eighth going back to the lease owners, the landowners, 12.5, you'd add 4.5 to it. So you'd have 17% burden. That's not out of line, but then you've probably got to pay Masterson something too. Anyway, effective March 27, 2017, the property became subject to a university lands D&D unit agreement, DDU agreement, which allows for all 192 existing leases covering 134,000 acres to be combined into one unit, one drilling and development unit for development purposes. The term of that agreement expires last year, December last year. The agreement, the unit agreement, grants the right to extend through December 31, 2028 if compliance with the agreement is met and the extension fee is paid, which is great. That's what this kind of offering or some other way of raising money, they'll meet that hands down. The criminals want Nextbridge to lose their leases. That's what they want. That's why they delay everything and leave Nextbridge in this limbo. I love that McCabe is, and with the help of Roth Capital and the rest, they're moving forward. They are moving forward. They're not going to wait for Congress. That's what it looks like. Okay. So, drilling obligations under the unit agreement include 5 wells per year in 21, 22, and 23. The drilling obligations are minimum and may be exceeded. All drilling obligations through 22 have been met. Torchlight had drilled 14 test wells in the Ora Grande in order to stay in compliance with the unit agreement and to test for zones. All right, I'm not going to read all they go through a lot of the change in ownership and everything. I don't want to go through all that. All right, now it's payments. Anyway, this will be a great source of data if there's an offering actually done. A lot of risks, but that's the nature of the beast. Unevaluated costs, $119 million. It's a lot. Current projects. Let's just read a couple of these. This is another discussion of the Ora Grande. It's repetitive. Okay, but it says some new information. The drilling and development unit agreement grants the right to extend the unit agreement through December 31, 2029, if compliance with the agreement is met, and the extension fee associated with the additional time is paid. Here's the important thing. The company expects to exercise its option to extend the term under the agreement prior to its expiration. Drilling obligations under the unit agreement as amended includes 4 wells in 21, 5 wells per year, 22, 23, and 24, which we're in now. And this is, I'll read this. I'm not sure what this technology is. While drilling wells in 22, our operations team deployed a new mist drilling solution that increased hole stability, which we believe will result in meaningful cost savings for additional wells drilled in the Ora Grande. That's very good. Multiple test wells were drilled. Okay, we know that. They're mostly science wells to this point. Then he talks about the acquisitions of the interest to get it up to 100%, as we've discussed. There's really no unfriendly debt. I mean, there's some debt there to Greg McCabe, it looks like, but there's no. The company essentially does not have debt that it has to worry about being in conflict with the company's goals. All right, so we just went over, they've drilled successful wells. I did see a chart in there. I'm not going to go back to it because that gets me away from talking to you. But I think there were 3 or 4 dry hole, unsuccessful wells, but out of 15 or 20 wells drilled, that's all right. They talked about water wells, water disposal wells, and those are important as well, that I always leave out of my valuation calculation. So I just did a little arithmetic, and I'll probably just end on this thought. I have no idea if this offering is going to be completed, but if they were to sell 40 million shares at $7.50, personally, I think could be $10 or $15. Maybe it could be lower. I don't know. Just picking a number, $7.50 a share. That's $300 million. They would obviously have enough money for overhead, but they'd have enough money to meet their drilling costs, to pay their the lease extension fees, to drill this year and next year, maybe buy, if they want to buy more acreage. The reason that's important to you is, and I'm totally against it, but if for some reason, Nextbridge started trading in the future, they don't need capital anymore from the market. So as much as the criminals would try, if they're publicly traded, the criminals will do anything in their power to drive the stock downward. by selling hundreds of millions of counterfeit shares. How do I know that? Well, I don't. That's what they've done. It's what they've done. So anyway, if they're public, that only affects you in a bad way if the company needs to do a deal. So let's use my example. Let's say they raise the money at 750, and by drilling, Greg and his team are able to prove up $1 billion or $2 billion of the reserves. Well, you could argue the stock's worth $25 a share. But the criminals will try to drive it down to 2 or 3, so that if Greg had to go out to raise money, he would have to dilute his number of shares. Whatever the asset value is the numerator. Then you divide it by the number of shares. Their whole goal is that Greg would have to turn to one of the smiling faces on Wall Street, and they'd say, oh, we'll get a deal done for you. But according to the market price right now, sir, it's trading at 3, so we can get it done at $2.50 a share when the stock's worth $25 a share. But that's the problem with the US markets. They can flood the market with supply of shares that don't exist. Then they go to a placement agent. They buy the stock directly from a company at the low market price that they artificially created in the first place. It is just the perfect crime, particularly when you own Gensler, you bribe the rest of them, and you own Congress. It's genius. It's absolute genius. No one cares. Well, they will care if 1 or 2 prime brokers goes down. They will care if American Mrs. Tanaka, that's what they always talked about, Japanese investors. I wonder what it would be in the United States. Mrs. Smith, I guess. But particularly if female investors, female voters who have an outsized power in the United States, politicians cater rightfully to women. And women care about their finances. And women, believe it or not, own the majority of investable assets in the United States. Women have more wealth than men. But if women were to start finding out, and men too, but I really think if women in charge of retirement plans started calling their congressmen, it could change everything. So anyway, the cycle of if Nextbridge were in a weak position and needed capital, there might be as many as 600 million shares or 1 billion shares out there that were sold to destroy Torchlight, to destroy MMAT, to destroy MMTLP. They don't exist. And what the criminals would love to do is get you to do nothing, leave McCabe in limbo, and then he, at the last minute, has to go to a placement agent to raise money, and they say, let's do it at $1. And that's a win for the criminals. They could give him 40 million shares at $1, and they reduce their problem by 40 million shares. And then, if the company's trading, they suppress that price because he's only raised 40 million. He's gonna run out of that money after, I don't know, a year and 10 wells. And then he has to go back to the market, and they've suppressed the price, and they do it by creating stock out of thin air. That's when it's trading. That's why I hope he doesn't trade. And then magic of their crime is they define that the price is worth maybe 50 cents by that time. He needs money. He goes sell shares, and constantly the CEO is on a treadmill. The criminals take all the profit out because they exist and they deserve it. And it just goes on and on and on. Well, here, I think what you have, if you assume they do this deal, because look, Nextbridge cannot wait for Congress. I just read to you from the prospectus. If Nextbridge doesn't drill 5 wells this year, if it doesn't extend the leases, I mean, I don't know. What do you think the extension cost on a lease would be? They've got 135,000 acres. They have to extend it for 5 years. I don't know. I don't think it would be $10. Would it be $100? Let's just say it's $100. That's $13 million he has to come up with. Sorry. Times 100. Yeah, it's 13.5 million. So my point is, the reason these guys are pushing for you to do nothing, leave Greg in limbo so he can't raise money, they want Nextbridge to lose its leases and not be able to drill and not be able to extend. Well, this offering answers that problem. This moves the company forward. And I think it's brilliant, regardless of price. Regardless of price. I don't see any data in this offering that makes me believe the price is going to be at a massive number. I thought about it all day and trying to think about what would this kind of offering have been if we had normal markets. And I think back when these kind of deals came across my desk with the prospectus and the road shows and all that, there were two price levels for newer stories and newer companies. They used to come out in that $12.50 range, sort of $10 to $15. And if the demand were high, it'd come out at $15. If the demand were low, maybe it got done at $10 or $11 a share. That was usually. The other level was higher, like get it done at $25 a share, $20 a share, But those, I don't know what'll happen here. So I used $750 because that will, I don't know why, it gives $300 million to McCabe. And I don't even know how much these wells cost to drill if you build out a platform and then drill 20 horizontals off of that platform, and you go out, I don't know how far out they're going to go, 10,000 feet? I mean, each well could be really expensive. It could be anywhere from 2 million to 6 million. It could be more per well. So if he were to raise 300 million, he wouldn't need to go back to the criminals. And if he has pressure to trade on the open market, well, I guess I'd live with it then, because he would never, it wouldn't matter if he were to prove up, I don't know, half the reserves over the next 2 years. So the stock's worth $25 to $50 a share. I have no idea. I'm just trying to give you an example. Even if the criminals suppress the price and keep it at $2, $3, he doesn't have to go avail himself of the market again. So he just plugs along drilling with his own money. And once he can start drilling out of cash flow, the criminals are really, to quote Kurt Kramer, they're FUXED. So I think it's brilliant. I think if they do this offering, it's brilliant. I have no idea if they will, but if they brought in enough money that they don't need to, the capital, as Gensler calls it, the capital formation of abilities of the market, great. Go ahead and trade. But if they need to raise capital, don't trade. All right. Another thing he could do with this money, particularly after he's drilled a bunch of wells and if he starts producing out of some wells, he could put out a tender offer. And he could say, I want to buy, I believe he can limit it to, I don't know. Let's say he wants to clean up the small shareholders on his book. Voluntarily, not being mean, but let's say he's got 65,000 shareholders, but of course many haven't moved over or can't move over. So let's pick a lower number. Let's say his 15,000 shareholders registered. And let's say half of them own fewer than 2,000 shares. He could put out a tender offer and say it would have to be publicized. It would go through the SEC. And I don't know, make the number up. He's willing to use 10% of this money raised, $30 million, to buy back in a Dutch auction shareholders who own fewer than, let's phrase it this way, up to $2,500 per shareholder in a range of 50 cents to $20. And you just put in your price, and maybe he'd allow you to put in more than one vote. First priority, and then if that fails, you have a fallback position. But anyway, he could spend $30 million cleaning up his cap table and getting some of you guys out with the money you put up. And that could happen. I could see that being a use of proceeds for $30 million, for a portion of it, just a portion of it. But imagine the stress that would put on the system. And then he would have those shares they'd go into the treasury. They'd be retired, I guess, because he has enough authorized shares. I think that's something he could do as a use of proceeds. But the most important thing he would be doing is proving up reserves and getting closer and closer to cash flow. That's the all-important metric in the oil and gas business. Cash flow is king. So remember, there's only 165 million real shares of NextBridge. There might be over 600 million that are MMTLP in your accounts. So move them if you can. What somebody said today to me is not everybody can move, and it's not the fee. It's just their firms won't allow them to move. Well, you've got 105 broker-dealers in this. I'm sure they're all talking to each other. They all use Gibson Dunn or somebody like Gibson Dunn. It's all a small fraternity. This is a river of money. They all know it's how their daughters go to Harvard. So it's possible that a company like Fidelity has run out of shares, or they have so few left, they want to save those few to settle up with really troublesome clients and lawsuits. It's possible Schwab's run out of shares, but it doesn't mean the the whole system in every single brokerage firm that you cannot get your shares. I know from my lives that people at E-Trade are still getting their shares. I strongly recommend that you move your shares to NextBridge. And if you can't, document it. Send an email to your broker-dealer, request it. Remember, that's how the trade station lawsuit started. The plaintiff asked for their shares, couldn't get them. So that gives causative action. I'm not a lawyer, but it sounds good, causative action. And then write a letter to NextBridge or the transfer agent, or both, just saying, I tried. And that'll be a record for later. This NextBridge situation, if you can just, I'm not saying we shouldn't pursue everything else, and I'll help with everything else. But if you can follow the logic that they may have 5 billion barrels recoverable, but they have to drill. They say in the prospectus, they have 5 distinct zones. They want to drill those up at different levels. And they want to hold the leases. They want to get the 5-year extension. And then this is a true growth story. This is how fortunes are made. I had a CEO who I raised money for years ago. He said there's no business in the world where you can become wealthy overnight by just doing one thing, drilling a well, a hole in the ground. Everything else takes time. Well, it's going to take a little time. But man, I don't know if they're going to do this offering, but I saw it on Bird Lady Pigeon Roller, made me look it up, and sure enough, in February, they amended the S1. It's ready to go. They had to change auditing firms. So just imagine if he raised $250,000 and that's all he needed. I don't know this. We'll know more as we go along. But maybe that's all he needs to prove up this project in a massive way. It's going to trap out the shorts unbelievably. And they're going to run out of all optionality to futz around. And I continue to recommend that people who can move their MMTLP, which is a deleted security, which doesn't have any, you're entitled to shares of NextBridge. But if your firm runs out of shares of NextBridge, all they're going to give you is cash or a cash equivalent. And then the question is, how much cash and what equivalent? And you and I individually can't sit in a high-priced battle with Gibson Dunn to determine that. So I think the best way to get access to your investment is to move to NextBridge. And ironically, I think it's the best way to trap out the shorts. They are trapped, but if you give McCabe the ability to accelerate his drilling and put out reports, you're going to see these guys smoked out like wasps in a nest hanging over your front door. So anyway, I'm going to leave it at that. It's 1 hour, and I thank you for listening. I'm sorry for being a little bit down. It's just so bloody hot. We'll talk tomorrow. Sleep tight, and cheers.